Mr. N.S. Ventakesh is head of Treasury at IDBI Bank. He's joining us here with his thoughts. Sir, very good morning. Thanks for coming in. Quite a monster rally on the Indian rupee. I mean, I guess it was a turn in sentiment both globally, domestically. They came together. So, you know,
that's right. I think both the things came together. That is basically the QE3 announcements came to coupled with our own reform process which had got initiated. I think it turned the sentiment. Earlier it was basically a sentiment was not there. Now this has brought in a lot of sentiment, and coupled with that, the market started performing well. The equity market started performing well. We saw a lot of FI inflows coming in. I think a lot of dollar selling by the foreign banks were noticed. This has supported the market. I believe that market has gained considerable strength over the last maybe around a week.
So at 53.24, sir, I mean, we're up what about 4% or a little bit more than that in this month alone.
Yes.
So you're still saying that, you know, the tide of sentiment could take us higher, maybe?
I believe that the tide of sentiment and maybe the next round of reforms, whatever I'm hearing is that basically for ECB there could be a enhancement of the limit from 40 billion to 50 billion, and maybe for NBFCs and all those segments, the ECB guidelines could get relaxed. So to that much extent, you will see more dollar flows coming inside the country. If the dollar supply is there, I believe that you will see more positive sentiment happening, and because of that you will definitely see the 53 being broken. I believe that the charts are currently showing somewhere around 52.5.
Okay. So a couple of specific factors. So on the fund flow side, there have been strong flows, both on the equity end and even on the ECB end, I believe.
Yes. Definitely on the equity, there has been more fund flows. On the ECB, definitely money has come into the Indian corporates. We see a lot of fund flows coming in. Going ahead, we believe that if this ECB limits are enhanced to 50 billion, we will see additional fund flows coming in. Because globally, after the QE3 has been announced, you actually see a lot of global liquidities sloshing around, which will find its way into the Indian shores because of higher returns which are available.
Okay. And so the recent measures that were taken in terms of cutting withholding tax on ECBs and also on infra bonds, those specifically, do they have any impact?
See, if you look at that, it was essentially a notification. It was already there in the budget. What they did was they announced that notification. But in that notification, if you look at it, they actually smoothened the process. They actually defined which are all the ECB borrowings which will comply with the lower withholding tax of 5%, which are all the, let us say, the bond issues which will comply with that. So you need not go back to the government every now and then to take the approval. So I think it has smoothened out the process. That smoothening out has definitely caught the fancy of the, I would say, the foreign investors.
So, you know, I mean, this is, you know, a debate we always have, market versus macros, but at the end of the day, on the macro end, nothing has really changed. Now, I was talking about those S&P forecast cut. Besides, even on the trade deficit side, etc., we haven't seen any major change. So this is a liquidity plus sentiment-driven change.
I believe that. I tend to agree with you on that. The major issue is that the current account deficit is still there. Though we are talking of a current account deficit of 3.5% now, compared to 3.94% last year. So at 3.5% current account deficit, I think it is manageable. And coupled with that, you see the flows coming in. Always, if you look at it, for a growing economy, the current account deficit tends to be there, which will be supported by the capital flows coming in. Last year, the capital flows were not to that great extent. Now, with all these sentiments, positive sentiments, a slew of reforms happening, I think you will see more and more capital account flows.
So as long as you can finance that current account deficit, you're fine. So just again, one last question from a more theoretical standpoint. So on a real basis, what is a, you know, sort of appropriate value for the rupee right now?
See, on a trade weighted basis, basically it is somewhere around ranging between 53.5 to say around 53.70.
Okay.
It's a dynamic peg, so it keeps on moving depending upon how you do the trade and all those things. But I think as of now, it is at around 53.5, 53.70.
So they're more or less fairly valued.
Yes, more or less fairly valued.
Fair enough. So I want to talk a little bit about the bond markets as well. Those have been very quiet. We haven't seen any action play out in the bond markets. Why is that?
At 8:15, I think the market is waiting for the next Q. The next Q is essentially the market is looking for the Friday when maybe the second half borrowing program could get announced. If the second half borrowing program is announced, and if let us assume that there is no additional borrowing, then I think initially there could be a little bit of a knee-jerk reaction of the yields falling down. But then the market will realize that maybe with all the revenue collections dropping, the fiscal deficit marginally slipping, there could be an additional borrowing. That worry will always be there in the back of the mind. But on the contrary, if on 28th, if they announce a government borrowing and then they say that to finance the fiscal deficit slippage, that maybe around 30,000-40,000 crore of additional borrowing is there. I think the market will accept that because credit is not picking up. So definitely there will be demand from the banking sector. So the market will accept that and the yields will start factoring in that, and then you will see the yields actually going down, because going ahead the market definitely feels that there is a we are on the downward spiral in interest rates. So to that much extent the yields will start reflecting that.
So at these levels, are we building in a rate cut in October, or would that come as a surprise and then push yields down if it happens?
At these levels, I think it is 50-50.
It's 50-50.
It's 50-50.
All right, closer to the data points will be watched. Thanks so much, Mr.
Thank you
Venkatesh.
so
Always
much.
a pleasure
Thanks.
speaking to you. That's the money market view coming in on both the currency end and the bond end. The currency end certainly far more interesting right now.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.